What's up everyone, again it's Matty from Logic Effects. I'm here with the part 2 video of the COT report strategy, and I'm going to be covering one of the indicators here that I've made, which is going to be on the legacy report. The part 1 video goes over the new traders in financial futures report. It's way more transparent as it goes over the non-commercial participants in much more detail, but the non-commercials versus commercials indicator can be still useful in longer term trends. You just won't be catching the shorter term volatility and sentiment flips in that sense. So in this video, I'm going to show you how to make an indicator just like this that you see on my screen. This is going to be GBP USD, and what it's done is it's taken the GBP non-commercial sentiment and plotted it against the US dollar non-commercial sentiment. The non-commercials are who we care about. I'm not going to explain why. I'll be covering exactly where you can find out why that is in the actual CFTC website. So if we go over to google.com, all you need to do is type in CFTC, and that's going to give you the Commodity Futures Trading Commission. And what we want to do is click that link, and it'll give us the full website of where we're going to find the Commitment of Traders report. So where to find it is you'll go over to here in the middle, Market Data and Economic Analysis. You'll go down to the second link, which is the Commitment of Traders report. Go ahead and click that. Now this is the page where you're going to find all the information about the COT report. So all this writing here is all information that I would definitely read before going ahead with this video. So give this a read. It goes over exactly the different types of reports here. So in the first part 1 series, we covered traders in financial futures, which is the most recent type of report released by the CFTC, and it's the most transparent because it shows exactly the leverage funds and basically the hedge fund positioning and sentiment in the markets, and it gives you that edge when trading forex because now you can have the same positioning as the hedge funds. You can scale in and scale out of positions when you feel confident that the market is trending in your favor. On the left hand side here, we have different market data and economic analysis links, such as the explanatory notes. Definitely read the explanatory notes, read the release schedule, read about the COT reports. Now, in this video, I'm going to be covering the legacy report, and the legacy report is the one which is talked about a lot online. You'll see it on a lot of websites, and that's when it's talking about the non-commercials versus the commercial participants. Now, in the traders in financial futures, those non-commercial participants are actually split up into two more participants, which if we go down here is the leverage funds and asset managers, and we focus on the leverage funds because they were the hedge funds in part 1. So if you haven't watched part 1, definitely give that a watch first before you watch this video, because this video is going to go into the legacy report. It's a little bit older, but it's still quite useful for long-term trading and finding those long-term trends when trading forex. So what we're going to do is show you exactly how to make this indicator here and how you can plot it against price data on the chart that you can see here. So I'm just going to go over exactly what the indicator is first, so it gives you an idea of what to expect when you finish the indicator. So in the blue lines, we have the GBP non-commercial sentiment, and in the orange lines, we have the US dollar non-commercial sentiment. Now, a simple rule that we have with this indicator is when the blue line, so when the GBP is above 0, that means they're buying the pounds, and when the GBP, the blue line, is below 0, they're selling the pounds. Now the same goes for the US dollar. When the orange line is below the 0, it means they're selling US dollars. If the orange line is above the 0 mark, then they're buying US dollars. And when we combine that, what do we want to look for? Well, as forex traders, you'll understand that we're trading in currency pairs. For example, GBP USD. What do we want to happen with the non-commercial sentiment? Just use a bit of logic here, have a think, right? So I've outlined some arrows and some lines here to give you a clue. If we want to long GBP USD, we want the blue line to be above 0. We want the orange line to be below 0, because what does that mean? That means the non-commercial participants in the market are buying the pound and selling the dollar at the same time. Now that's important, at the same time. We want the highest odds trades and trends that are going to happen, and we want to be making sure that the market is with us and not against us. If the market is against us, there's a very high probability that our trade will fail. Take that in, make a note of it, right? So I've outlined these marks because this is where it's worked the best. So here, at the start of 2005 to 2006, what did we have? Non-commercial participants were buying the pound, so the blue line was above the zero, they were selling the dollar. And in the grey line here is the GBP USD exchange rate. What happened? In that exact same period, the GBP USD exchange rate went up. Look how many opportunities there were to buy, right? What happened here? What happened when the exact opposite happened just a few months later? Blue line went below zero, orange line went above zero, means the non-commercial participants are selling GBP USD. What happened to this grey line? The grey line went down. Look how powerful this is. Again, middle of 2006 to the middle or the start of 2009. 3 whole years. What happened? During that 3 whole years, non-commercial participants were buying the pound, selling the dollar. Obviously there's some blips here, but majority of the time, that's what they were doing. What happened to the grey line, the exchange rate? A massive uptrend for 3 years. Imagine that, right? Imagine holding a trend and a position for up to 3 years. Just take that in, and that's how powerful this can be in your trading. Even the 2008 financial crisis, when GBP USD dropped, what did it predict? It predicted it. Non-commercial participants predicted that this was going to happen. GBP USD exchange rate fell significantly. Non-commercial participants were already selling the GBP US dollar exchange rate, right? And that's a general rule of thumb going down the whole years. It's been successful over the past 16 years, and I'm here to give you this for free and actually use it within your own analysis. And we like to use it in the fundamental analysis because that's what the non-commercial participants are making money from. They're speculating on a fundamental political, economical basis on what's going to happen on the exchange rates. And then what they do is they start putting in their positions and looking at these long-term trends. And that's what we're all about at Logic FX. We're all about the global macro fundamental aspect of trading, using economics, using political themes, and actually applying it to Forex. No one out there like us. We want to really bring this into the light of Forex trading because we're absolutely sick and tired of just technical traders out there. So how do we make this indicator? Let's get into it. What we want to do is go to the CFTC government website. We've already gone there. We've gone to the market data economic analysis. We've gone to the commitment of traders link just here. And now we're on this page, just like this. What we want to do now is go to the historical compressed. Go ahead and click that. And you'll see the different types of reports in headings here. So the disaggregated futures only report is covered here, futures and options here, traders in financial futures, futures only reports, what we used on the part 1 video, give that a watch. And what we're interested in is the legacy report, which is going to be the futures only report. Down here is what we're interested in. Now, to get all the data historically so that we can come up with some really good conclusions, we want to gather all the data. So the quickest way to do this is download the Excel compressed files over here. What we want to do is get the data 1986 to 2016. Go ahead and click that Excel button there. That'll give you a download link that will pop up. Download the 2017, because we've already got 1986 to 2016. Now we want to get 2016 to 2020. So we go to the 2017 link over here, click the Excel button. We want to go to 2018 over here, click the Excel button. 2019, click the Excel button again. And 2020, click that Excel button. Now, after you've got all those files, it'll start to look something like this. So the highlighted ones I've got here. FU and FUT, and it'll have like a number after it, right? Now, what that means is this would be the financial traders report from 1986 to 06. That's what the 8606 means. The 1516, so 2015 to 2016. 07 to 14, that's 2007 to 2014. And then we have the yearly ones here, 17, 18, 19, and 20. So what we want to do now is first so ignore these two here because these are the ones that I've already made. What we want to do now is actually make a new Excel sheet, and we're going to call this all COT data, right? Go ahead and make that, open that up now. And then once you've opened that up, right? So I've got mine here. Once you've got this blank Excel sheet, what we want to do now is open the one that has the most data. So we're going to start from oldest, and then we're going to go ahead and get to the newest one. So we're going to start in 8606, this one here. Double click that, open it up, and let's see what it actually looks like. So let's have a look at that. We'll bring it over here. This is what it looks like. A little bit messy, a little bit disgusting, but don't worry about it just yet. We're not interested in how it looks right now. All we need to do, the first step, is to get all the data. So simply Control A, Control C, go over to that new spreadsheet you've just made, paste that in, and kaboom. Give it a bit of time. Might take a lot of time because of the amount of rows and data that's in this report, and you'll have the report like so. Go ahead and go back to this one, 8606, you can cross that off, don't need it anymore. We've got it all in this new Excel sheet. Now, what's next? Now we want to do 07 2014, because that's the next year, right? After 2006, what comes next? 2007, and that's the Excel file here, 2007 to 2014. We want to do the exact same thing, right? We want to open it up, we want to copy all the data, but this time we don't need the first row. So you can go ahead and delete the first row. Now you can Control A, Control C, go to that new spreadsheet you just made called all COT data, paste it in at the end, right at the bottom of the Excel sheet, and that's going to give you all the data from 2007 to 2014, and it's going to stick it at the end of the 1986 to the 2006 data. Right? Everyone up so far? So, what you want to do now is you want to keep doing this, so we can close the 2017-2014 data off because we've pasted that in. What you want to do now is do the same thing to 2015 to 2016, 2017, 2018, and 2019. Give the video a pause until you've done all of that, and just follow that exact same step of copy and pasting it all at the end of the Excel sheet, and make sure to delete the first row of the newer Excel data. Right? I'm going to cross this off because I don't need it anymore. Pause the video when you've done that and come back when you're ready. So I'm going to give you this data here, and this is all of the data from 1986 all the way to 2020. It's exactly the same data, but this time I've highlighted some important information. This time round, I've highlighted the market and exchange names, so this will give us exactly what we're looking for. The report date, so the date, and if we go all the way over here to the columns AW, AX, similar to the best Forex strategy COT report video part 1, we've identified the percentage of open interest of non-commercials long all and the percentage of open interest non-commercials short all. Okay, and that's going to be the key data in our indicator, right? That's going to be the key data in our indicator. So what we're going to do now is create a new sheet in your all COT data called non-commercial sentiment. Okay, everyone do that. Create a new sheet in your Excel sheet called non-commercial sentiment. And what we're going to do in that new sheet is highlight column A, highlight column C. So to do this, click the A column, hold Control, click the C column, scroll all the way to the right, hold Control again, and click AW and AX. Control C, go to the non-commercial sentiment new sheet that you've just made, paste it in up here, and it'll give you the highlighted cells that I have here. Now, an extra step that I've done, and one of the most important steps that I've done, is create a new heading, a new column called non-commercial sentiment. Okay? And what we're going to do now is a simple calculation. Okay? A simple calculation to calculate the non-commercial sentiment. And that is basically the non-commercial long all minus the non-commercial short all. Simple as that. That's going to give us a value on this side, which is going to be used in our non-commercial sentiment analysis. Now, how do we, actually make use of this? Well, what you want to do is Control A and then Data and then click Filter. Now that we have a filter, we can find specific currencies that we want to trade. For example, if we go to Australian dollar, so take AUS for short for Australian, it'll filter out the Australian dollar, and that's what we want to do. So we want to click that, click OK, and now we have only the Australian dollar data in the non-commercial participants section. Okay. We want to filter by orders to newest. Go ahead and click that in the top hand here, orders to newest, and that means now the data goes from orders to newest, all filtered for you, and you don't have to worry about all the formatting issues. Now, what does that give us here? Well, now we have the non-commercial sentiment of the Australian dollar. But as you saw in the example I did at the start, what do forex traders do? They trade forex currency pairs. So when we're trading pairs, we also need to get the other side, right? So we're trading AUD. What we're going to do now, we also want to find the US dollar. But first, let's go ahead and create our AUD USD analysis. Yeah. So what we're going to do is just go ahead and highlight the dates here, highlight the non-commercial sentiment here. Go ahead, Control C. Go to a new sheet, create a new sheet called AUD USD COT Analysis, and go ahead and paste that in here. And change the non-commercial sentiment to AUD sentiment, because that's what you've got. Okay. So what you'll do is you'll have these two columns here. Now we want to get this third column, USD non-commercial sentiment. What do we do now? We go ahead, clear our filter, go back on the filter, deselect all, type in U.S.dollar. Okay, now we have the US dollar index, and we want to click the ICE futures one, and that'll give us the most recent data from 2007 to 2020. We want to add another one, so US.S dollar, and then we go ahead and add the US dollar index New York Board of Trade, because that'll give us the previous data from before 2007. Okay. Now we've got the 2005 data, 2006 data going back. Okay. So basically, all you want to do, U.S.dollar, highlight all of them, and that'll give us all the data from 2004 to current date. Now, we don't need to highlight date this time. We've got all the non-commercial sentiment on the side. Just double check, make sure it's filtered orders to newest. Go ahead, Control C and Control V, paste that USD non-commercial sentiment in on the side here. And what we'll do is we'll have some data now that starts to line up. Okay. I've also got the same AUD USD exchange rate data here from 2004, 06, 01, all the way down to the 23rd of the 6th, 2020. That's UK time frame. So this is currently in US format for dates, but I'm just explaining it here that I've got the same matching exchange rate data for that period, and you just want to make sure that AUD USD exchange rate data is on a weekly format. One simple way of getting this data is go into Google and type AUD USD investing.com historical data. Okay, on your chart, go ahead and click that first link. Go ahead in the weekly time frame here, so where it says time frame down here, we want to click weekly. Go away. We want to format the date here. Start date, we want to type the date where your COT data starts. So on our COT data, where did it start? 06/01/2004. So that's the 6th of January 2004. That's the start date. 06/01/2004. 06/01/2004. Go ahead and apply that, and then you have the weekly data from 2004 all the way to 2020. That'll give you that all you need to do is copy and paste that price data and just make sure it lines up with your COT data over here. Oh, my Excel is not responding. Okay, we're back. Make sure that that COT data lines up exactly within those weekly time periods. That's the most important thing that we're going to do in this step, and that's how we're going to line up to make sure we can create an example just like this. So that's what we've done here. All we've done after that is highlighted everything, Control A, insert, line chart over here, more line charts. We go ahead, go to combo chart, and you can see it's a little bit dodgy, right? What we want to do is, because the AUD USD is on a separate axis, we want to click secondary axis, and that'll make sure we can now plot the data against each other. What do we have? We have the exact indicator we're looking for. And now you can start using this in your forex trading analysis. I would highly advise to use this on a fundamental basis so that you have the exact same outlook as the non-commercial participants trading the markets, because they're trading on a fundamental basis. They're making sure they're getting these long-term trends, economic themes, and the massive forex trends that they're sticking on. If you don't actually know how to do the fundamental analysis, just as a step here, if you haven't watched our fundamental analysis webinar, give that a watch, because it's going to give you some insights on how you can do that. It's completely free. Link will be in the description if you want to watch that. Also, if you cannot be bothered, you cannot be asked watching the rest of this video to create this template, we will have a template link in the description below so that you can use this exact one that I've made here. And I'll basically keep you up to date with the most recent data here. All you'll need to do now is just copy and paste the most recent data at the end on a weekly basis. So this will go all the way to 2020. All you need to do, find the last date in the data set, go ahead and copy and paste the 2020 data from the CFTC historical website at the end from the last week. So here it says 6/23/2020. So how would we update this? Well, again, we would go to Google. So if I just go ahead and go google.com. So if we go ahead to the CFTC website again, this is how you're going to update the indicator. So this is the next step. And you want to go to commit center traders. You now want to go to historical compressed. And instead of downloading every single thing, every single Excel sheet again for the futures only report, you just want to go to the 2020 Excel file. Okay, so go ahead and download that. Download it as an example here. Go ahead and open it. Enable editing. Control A, hit that data, hit that filter button, go to the report date here, deselect all 2020 because we don't need all the 2020, right? And if we go back to the data on all COT analysis, it says 6/23/2020 is our latest data. And if we go to the data filter here, date filter, we go to June, you see that this is what the data that I had in the template ended on. What you now need to do is get the 30th, because that's the next data point, and all of July. Go ahead and click all of July. Now you have from the end of June to all of July 2020. Control A, delete that first row. Sorry, you don't need to delete that. Just Control A this. So you can either drag and drop it like I'm going to do here. So get it all, Control C, paste that into your all data right at the bottom again, and that's it. That's the only step you need to do to update it. On a weekly basis, all you need to do is keep doing that to make sure the COT indicator is updated. Have a go, do it yourself, and see what it looks like. And that's how you basically make this COT indicator here, and it's how you're making sure you're on the right side of the trades. Now, remember, if you don't want to make this yourself, we've got an easy to use template. There will be a discount link that we're going to be using while this video is up, which is COT99. Definitely get your discount code because it's going to save you a bunch of money and a bunch of time trying to make this template. You know, if you want to do the fundamental analysis as well on the currency pairs when you want to trade and find those high probability, high probability trends, make sure to give that fundamental webinar a watch that we have in the link in the description, the Learn to Trade link, and we'd like to see you there as part of our team as well. So that's it for this video on the COT Best Forex Trading Strategy Part 2. Make sure to subscribe, give us a like, give us a comment on what you're thinking, and we're looking to release more content like this in the future. Thank you for watching. Give the video a like, give it a subscribe. It's Matty from Logic FX, and I'll see you guys in a bit.